the best way to invest is to ignore politics, or at least not let your personal political views influence your stock portfolio. Market tends to go up, whether it's Democrats or Republicans in the White House. I guess sometimes we have to be a little bit more specific about the extent to which they're also the same party that's in the White House is also in Congress. But all in all, the market it's PE times E, and as long as the earnings outlook is for more growth, and the longer is that outlook for growth, the higher the PE, and that's kind of the environment we're in right now.
So, Ed, how did your outlook on this market change, if at all, with the election last Tuesday?
More bullish, not for political reasons, but simply because I think animal spirits have been unleashed. Trump is definitely viewed as being a more pro-business president than Harris would have been. He wants to cut taxes again on corporations, as well as cut some taxes on lower income workers. He wants to deregulate. And then I think the market is also excited about the possibility that some of these intractable geopolitical crises might have a chance of getting resolved as kind of Trump does his deal-making magic, perhaps between Ukraine and Russia. And I don't think it's going to be deal-making in the Middle East. I think it's going to be sort of a free ticket for the Israelis to take out Iran.
I got futures at 6,022. Remind us, Ed Yardeni, where we are with your 7% growth rate in 1, 3, dare I say, in 10 years.
Mm-hmm. Well, when Trump was elected, we thought about it. We thought about the animal spirits and what could happen to earnings as a result of the profit margin, and we turned more bullish. The reality is we haven't been bullish enough, and we've been among the most bullish. But so now we're looking for 6,100 by the end of the year on the S&P 500. That's almost a layup. And then I think we're looking for 7,000 by the end of next year, and 8,000 by the end of 2026, and 8 to 10,000 by the end of the decade, probably closer to 10 than to 8.
Right.